Hey everyone, welcome back to my channel. Today I have another recap for you on how I traded ES. Keep in mind, ES, SPY, and SPX all have the same price action, so if you trade one of them, you can trade any of them. It just depends on your personal style of trading and the accessibility through your broker of choice. If you use a tool like Bookmap, I highly recommend that you point it at ES futures regardless of whether or not you're trading SPX, SPY, or ES directly, since that will give you the most valuable insight. Before we get started, if you'd like to get a 10% discount for TradingView, don't forget to use my referral link in the description. You'll also find referral links for TradingView and Top Step funded trader programs that will give us both discounts. Lastly, if you enjoyed this content, don't forget to like and subscribe to help me grow this channel. So you can see on my chart, I've already drawn the pre-market levels that I was going into the day with, and then 3 support levels were derived from gamma exposure, which I can show here, and I plan to adjust them as needed. This doesn't look the same. This is already updated, but you can see here I had 3680 or 368, 3660 or 366, and 3650 or 365. Now, because of all the bearish expectations we've been having with all the macroeconomic news we've been seeing, including the Fed, who decided to raise rates by 75 BPS yesterday, and which really the market wasn't fully prepared for. But also due to inflation being higher than expected and all of the bad news we've been seeing, I definitely had a bearish expectation, a bearish bias on the day. I try to keep my bias limited. And one thing to note is that tomorrow is it's a quad witching day. So there's a lot of options expirations going on, or it's considered to be one of the biggest of 4 OPEX events of the year. So, I mean, this was also on my mind because it oftentimes leads to a pretty flat day since there's so much open interest expiring off tomorrow. And that could also start to make things turn bullish. So I did have that on my mind, but again, it was truly, I was still looking out of the gate to favor shorts. So that being said, let's get right into it here. So I have this at 909, and if you've seen my videos before, you know once I draw my levels and everything and do my daily and weekly preparation, I take trades typically off the 3-minute. Now I'll go ahead and get this moving here. So when we start opening, I'm already looking for shorts. So right out of the gate, once we get to 9:30 here and the opening bell hits, even if we get, so we can see we get some bullish, we get a bullish candle, we get a green candle, and let me just zoom in here to make this easier to see. So we get a green candle, and then, and we had high volume on this candle. However, just so we can see the volume a bit better. However, it's immediately followed by a red candle. So at this point, I can see that we're trying to break this level of support. And on the next candle, I was fully prepared to market in here, which typically I do limit orders. And actually, that's exactly what I did going into this next candle. I marketed in as we moved up and broke past. Now, at this point, TradingView actually started having issues. And this really freaked me out. I've never seen them have broker issues like this before, and it picked up my trade late and caused a severe amount of lag. I've already talked to the support about it. It impacted a lot of people, but it also made me panic, and I actually tried to panic close, and there was a delayed closing. And now keep in mind, when I entered this position, I had 2 micros, but basically I got in somewhere around 38.94 and then got out somewhere around 39.89. I ended up not taking a loss, thankfully, but I was flustered by it. I wasn't sure what happened. Everything seemed to stabilize pretty quick. I mean, by the time this candle happened, we were good to go, and I tried to get back on track. I saw that again we're rejecting this level of support, which we just ended up breaking through, so I wanted to take a trade off of it, and I immediately go in and check market net flow, and I see actually that we're starting to get a bearish cross, which to me is one of the best things I can see, especially with all the macroeconomic stuff going on. I was really looking for this because my plan was I was also going to take SPY puts at the same time that I took shorts on ES, and that's exactly what I did. I inserted a limit here, and let's let it play out. And actually, let me scroll back a little bit. So, okay, there we go. I just want to make sure that my value areas are all showing. So you can see this green line's value area low, value area high, and then the POC here. And I really didn't think we were even going to get up to the POC. I was confident in these pre-market lows holding. And so when I put my limit in, it actually picks it up again. At which point I felt much better. And my target, I wanted to see how we reacted once we got down to the first initial gamma level that I had marked here. Now I wasn't going to get out right away if we blew through it, and I was prepared to hold. I start getting a little nervous at the value area low hold, but still at this point, nothing that's really going to scare me out. And then we start seeing these candles form, and once we start seeing these candles form, I actually start to make the decision to slide my stop just above that value area low, to that way, you know, I don't get shook out too easy right above this candle. And then right here, I actually I do end up getting pushed out anyway. So made a nice little profit there. I left my SPY puts running today because those I don't manage as heavily as I do my futures, and that's because futures can rack up wins or losses a lot faster. So I do trail my stops. My plan with my SPY options was to hold them until we saw a market structure break, and at this point you can see that we have yet to make a higher high, so there's no point to get out. Plus, if I flip back over here to the market net flow, we can also see puts just keep expanding. And then so right here is where I got into another play. Right off this POC, I set a limit short here, and I'm taking another play. And again, now at this point, because the value area low held before, I'm waiting to see the reaction here at this value area low. And when we come down to it, we actually get a nice big move through it, which was a great reason to hold. And at this point, I'm just sliding I'm sliding them slowly because I don't want to get out too fast, because I was actually expecting a much bigger move down than this. But then when I started to see this green candle, this big green candle come in, I was like, okay, I need to start considering getting out. And then right here, you'll see, let me pause it right once this candle completes. Okay, these two candles were on low volume. That to me is saying, so this green candle being on high volume, already I'm thinking, okay, I need to close. And then I see this candle on low volume, and we still move down a little more. Like price action would make this look like we're, okay, we might come back down. But the fact that these were on such low volume right here tells me that, okay, this level of support, 3660, which is a gamma level, is going to act as strong support. And this has now become a pivot. This would actually be a great time to reverse because of this volume, and we're going to go back up. And now I didn't reverse because of my short bias, which I'm trying to do better with, but as you can see, that's exactly what happened, is that we end up moving back up again. Right here, these two candles on diminishing volume, even though it's at a level that was previously support, which is now becoming resistance, a gamma level, this diminishing volume on this candle, despite it being a bear hammer with this low volume, is again telling us it's a pivot. Also, there's some other factors. We can see the sectors are starting to turn green, and so this means we're going up. And again, I was confident in that, but on my mind, what my next play is okay, when can I get my next short? And sure enough, we see this rejection off the POC, this bear hammer candle, and I actually decide to set a limit right within the body of that candle to see if I can get in. And it does end up picking up my trade. And at this point, I'm going to try to ride it back down. Again, I'm being very careful because I want to be cautious with this value area low here, but at the same time, I don't want to get out of the trade too quickly, because I just, with everything considering, I just keep feeling we're going to drop hard, and I didn't want to miss the big drop. Now, that being said, if we start seeing candles like we're seeing now, this hammer candle and higher volume, which would be considered a bull hammer, I was actually fully prepared to get out. And then once we started seeing some green, I exited for a small win, which I was happy with. And at this point, I start noticing that market net flow, yeah, it's rising and calls are dropping. But overall, especially if there was a way I could show you how it looked at this point, overall, it looks very, very flat. And now I'm thinking, okay, tomorrow's an OPEX event. We're getting these weak bearish candles, and we're just not really getting very far. And in my head, I'm thinking, okay, this is going to be a sideways range day. So now I need to just look for base hits, small wins, not get too greedy, because that's what kept trying to happen to me. Is I kept losing out on some profits because I kept trying to get too greedy, and I kept thinking, okay, we're going to keep going down lower, and that just kept proving not to be the case. So my plan was, all right, if this is going to be a range day, I just need to be patient. And I should say one thing too is looking at these candles with the range day. I mean, we have the POC here. We do have what became resistance right here based on these candles. With this range day, I just need to, I'm still going to favor shorts, but I need to be cautious, and I need to keep an eye on market net flow. And what I'm looking for is for this sideways movement to sort of, to actually move, for it to pick a direction really. And I don't want to be too quick to take a play at this point. It's just, all of this is low volume, just sideways chop action. So I'm just looking for something that makes me intrigued to get in. And I had to be very patient today because, as you can see, there is just not a lot of good action. Like, there is, you could try to play these bottoms, you could try to play these tops, but at the same time, it's very easy to get shook out when it's like this low volume sideways price action where market net flow isn't doing anything. But where things actually get interesting is, what I want to point out is right here when we got this momentum alert. Now this was at 1:35 p.m. and full disclosure, I do have a day job, so while this is going on, like I always try to make it a point to pay attention to the opening hours and get as much as I can. And when volume dies down and other markets start to close and we get past 11 p.m., I'll gladly take a play, especially if it's like a clear-cut trending day. But when we see this sideways action happening and market net flow is just stagnant, at that point I just start, focusing on other things and doing the day job that I get paid for. But when we get in here and we start to get to 135 and we notice that I end up getting, so we get these big candles here and it doesn't quite make it up to support, but what ends up happening is I want to get to the point where we get the alert, because that's what drew my attention, because I do check every alert, but you can see there were several alerts in all this sideways chop. And the reason why I didn't really care is because you can see, yeah, puts went up slightly here and calls went up slightly here. So again, it's just sideways, and there's nothing intriguing happening in all this sideways chop. And that's what I want to be very clear about. So I needed something to show me that I should start paying attention. And at 135, when we get this alert, I look, and then next thing you know, watching the market net flow, we see this big jump in puts and calls stay flat. And at that point, to me, that says, okay, I need to look to take an entry. And so as we get to that, so this right here was the candle. So we saw the candle, the alert right around here, and we saw the put skyrocket on this candle. And it became very clear, and you could tell by the movement of this and the velocity of the candles forming, that it was time to get in. So as we actually cross this POC, I took another market order when I saw this, because this means across market wide, a whole bunch of puts just went into play. And so I wanted to make sure I caught that. I wanted to make sure I held for as much of this move as possible, because at this point I really felt like, okay, now's the time that we're going to break out of all this sideways chop. And sure enough, we hit the value area low. It looks like the value area low is going to hold a little bit, but then we push past it. And this was very, very good news at this point. So now my goal is to essentially try to hold through this value area low push as much as possible. I actually even considered adding on positions here when we were showing wicks to the top. So when we, with these green candles being on diminishing volume, and we start wicking to the top, and whenever we're getting red candles, and also you can see here we're wicking off the value area low, I truly was considering adding positions here, and I probably could have and still made something. But the thing was, even though we are moving down, it was still very choppy, and it just, at this point, because of everything we've already talked about with OPEX and everything, I decided not to. And then when we get this big green engulfing candle with what once again was, this time it's on rising volume. So one thing I want to point out is we see this, which looks very bearish, and it is, but then we see this super small body, super small candle, which still had relatively good volume, and that's like the first sign of stopping volume that we might not be going lower. And then when the follow-up candle looks like this, it's green, even though it's a topside wick, it's actually on increasing volume. And then what happened is when this candle started to form, now this wick came down and then bounced off the value area low. That was my cue to get out. And at that point, once again, even though we had this spike in market net flow, which led to this fantastic play, everything was just flat at this point. And so truth be told, after this point, I really didn't see anything that interested me. Again, there were certainly plays to be made, and I could have absolutely have held longer here, and I didn't. But at this point, we start getting these big moves back up, and honestly, like something like this, when we came down, I was kicking myself for getting out too early. But as we come up on these candles, these would have been great. When we see a candle like this, when things flip bullish and we see it blast through the value area low, you have two options here. You can either attempt to market in on such a strong candle, or the better option, in my opinion, is wait for a pivot and a hold off of the value area low and come back up. Now this doesn't quite come down to it, and that's one thing I want to point out, is that if you're playing retests, when you have depending on the strength of the move at which the break occurred, you have to remember, you can't set it right at the level. Oftentimes you have to set it a bit above the level, and there's no exact science to it. Like I wish I could sit here and say, okay, set it 4 points above the level and you're good. But the fact of the matter is, it really does depend on the strength of the move up. And when you get a retest and you start seeing it come down and wicks start to form, you can either choose to mark it in, or what I prefer to do is set a limit order here, and then if it gets picked up, I just make sure that my stop is somewhere that I'm comfortable with. Now, of course, the wider my stop, that also means my take profits have to be wider, which is perfectly fine. And what really would have been an ideal way to play this, it would have been, we see this break back up the value area low, come back down, sort of retest, make an attempt to get in here, and then my plan would be to take profits at the POC, which I did not do, but I'm just talking about how I should have played it. And looking at this, there would have been some scary times, but at that point, once you're in the play and you have your target set, it really is best to just make an effort to not let yourself, especially in a chop day like this, try to make an effort to not get shooken out. Now, it is important to slide your stops, and quite honestly, when you had this candle come up, I would have been sliding my stop up here. So when this candle occurred, it would have shaken me out anyway. But again, when you have it break back above and then retest on this level, that's another entry to get back in. And then I want to talk about this little downward shooting star here. When you have this shooting star on extra high volume, so we're pushing up on diminishing volume, which according to volume price analysis teaches us that, okay, the move up is weakening. And then we get this is what you call stopping volume. So this is certainly a good candle to exit on when you see something like this. And actually, it's a great candle to enter shorts on. Now, again, I did not enter shorts. It was a very, I didn't take too many trades here, but I just wanted to recap it because this is one of the few candles I consider market worthy when you have high volume and actually not, I wouldn't say ultra high volume, but definitely worthy volume. And this stop down, this is stopping volume, and these are great entry candles for taking market orders. And usually it's best to sit, if you're going to set a limit, set it right somewhere right in the candle body, and then it will pick you up and you'll get a fantastic entry, at which point you could just take profits at the closest level of support. Or what I like to do is slide my stops when we cross the support level. Now again, we're chopping around, and this is where it gets, this is another market worthy candle. It's the same sort of thing, high volume, push down, you can mark it in. Now we're so close to what the take profits would be that you don't have as much risk to reward as you do in this move, that you would in this move. But you can see we immediately break through support. But that's one reason why it might not be a good idea to take this one, is just because if you do set it, and like let's say your stop would be the top of the candle, you have this extra wide stop and you have a very small take profit. So your risk reward is basically completely flipped backwards, which is a big reason why it wouldn't be a great idea to take this one, but this one would be better. But you could see either way it still worked out. Either way, these are very powerful candles when they have the volume backing them, and you could have actually taken profits down at the value area low, or even slightly lower than that at support. But the fact of the matter is, it's just things to always consider is, where am I going to take profits and where am I going to set my stop? And if that risk reward ratio is ever screwed up, meaning it's not 1-to-1 or better, and I usually prefer better, then it's not worth taking. Now, this candle is another great entry candle. So we get stopping volume here, push down, then we get stopping volume here and push back up. And so again, a break and a retest off of this value area low and a push higher. This would have also been a fantastic entry into the close. Now, so I think I pretty much covered everything. Like there were several plays that I did not take that I wish I would have taken, but the big thing I wanted to point out today were my two, what I consider to be my two best plays, which were off of this support level in the beginning of the day, thanks to, which helped me gain conviction on those, was the cross with the market net flow. And then also when we had this momentum alert with puts just bumping up significantly like that without calls, with calls staying flat, that was another great entry for me to get in and ride that thing down. And then everything else is just pure volume price analysis, right? You don't necessarily need extra tools for it. I highly recommend using volume profile. And just to recap real quick, visible range and periodic volume profile are excellent tools for this. So if you look at volume, price action, and volume profile, so volume at time, volume profile with your value area highs and your POC, and then price action, those will net you many more trades. It just gives you a lot of extra conviction when you have some sort of deeper insight to the market, whether it be bookmap or flow data or something like that. And you can see in this case, my tool of choice is market net flow. Now, so I think that's all I really wanted to cover today. I appreciate you watching, and of course, if you have any questions, feel free to reach out in the comments, and have a great rest of your week. And if you're watching this the day that I put the video out, which is June 16th, just keep in mind tomorrow, June 17th, is a cloud witching day. So just be very careful when trading tomorrow. Thanks for watching.